Good morning. It's Vijay here. Today is Thursday, 22nd May 2025. Welcome to yet another episode of pre-market commentary. So what we saw day before yesterday was a big fall, and yesterday the bull strike, and there was a lot of volatility. Yesterday was on the news of FI selling about 10,000 crores plus the day before. So yesterday everybody was waiting what FIs will do. So volatility was severe during the day. The bulls took it up by nearly 300 points on the Nifty. Then it fell down 300 points, and then it closed somewhere in 100 points plus. So we are going to have volatility. Now volatility has come into play simply because you see the bond market in the US is playing havoc. And generally, when the bond market is playing havoc, equity markets get affected. The bond market vigilantes, as they're called, they are looking at recession. They're also looking at a landing, which is not going to be soft. But the authorities are looking for a soft landing. This is probably the scenario how it is. The road is not good in the days ahead, but that is US, and it will affect us also. But one has to brace for volatility, and you can have a plan. I will tell you what I'm doing at the end of this session, but this is what roller coaster will be. So everybody's question is, where will the market go up next? But that is, if you're very short term, then this is where you have to worry. So yesterday what happened in the market regained half of Tuesday's losses. Indices went up to 1%. Nifty, everybody looks at 24,800 and 25,000. So it reclaimed 24,800, but it has not, it has fallen from the 25,000 plus, which was there recently. Sensex is about close to 82,000. Mid caps outperformed the frontline indices. The market breadth was positive, which is a very good sign if you look at it in one way. And Nifty Bank was very volatile, actually, much more than Nifty. It rose 198 points, up from the lows and from day before yesterday's close. And mid cap was up about 437 points, and mainly buying returned in defense names after a strong outlook by BEL and Solar Industries. The other stocks which did well, Dixon Tech, uh, saw profit booking even though it came up with good results. JK Tires did very well yesterday, surging more than 10%. Margins are expanding in tire companies, so there could be interesting things in tire companies as well as in paper companies. I have a feeling when I look at the paper company charts, it is looking interesting for buying, but paper is a dud sector, so one has to be very careful when you pick and choose paper companies. Endurance, which is the auto component manufacturer, rose then 5%. Then Trident textile company rose. It reported 100% increase in profit. So textiles is another sector which could be in focus. But again, as a stress, it may not happen in the next 1 or 2 days. It may take weeks or maybe even a couple of months, as and when the US and the India free trade agreement is signed. PFC rose about 2%. BMW Industries rose up about 4%. So these were the prominent stocks yesterday. So the FIs returned to the market. They bought 2,200 crores. DI is also bought about 684. So 2,886 crores, which is close to 3,000, was bought by the institutions, which means 3,000 crores were sold by the panicky retail investors or the PM portfolio investors or AIFs and PMS and the so on and so forth. So yesterday, what happened after our market closed? There was huge volatility in the US markets. So the cartoon says it's either a quake or latest from Wall Street, looking at the volatility. So S&P fell down 1.61%, Nasdaq 1.41%, Russell 2.8%, Dow Jones fell 800 and odd points. The weak US 2-year bond action, that is where the demand was weak for the 20-year bond auction, and that's why the market just collapsed. US 10-year yield is now at 4.6. Dollar index is doing nothing. Brent oil is down slightly. Gold and silver both shot up. So this clearly indicates that people are very panicky. So they will sell at any one price. And here today we are now to look at IndusInd Bank's results which came. a heavy nervousness yesterday, and this kind of loss, the market was expecting 500 crore loss, whereas it ended up with the 2,300 crores. And for the first time, they labeled the losses as fraud. Till now, they were saying some accounting discrepancy and that kind of thing. But I think IndusInd Bank now is going to be a pariah as far as I can see. Whether it will go the Yes Bank way, RBL Bank way, or even Bandhan Bank way, one can't say. We had IndusInd Bank quite some time ago, and we sold it also. We burnt our fingers slightly, but if we had held on, then I think we would have been in very deep trouble. So that's why Gift Nifty is showing about 44 points down. So expect volatility today. Also is the weekly settlement of Nifty futures. So it is one thing to be bold when the markets are down. It is one thing to be prudent when markets are volatile. I think prudence is what is called for here. So there are some shining bright things which are happening. India EU free trade agreement talks. We finished on India UK free trade agreement talks recently. India EU trade talks will happen by July 2025 is what the feeling is. They're both, we are talking tariff and non-tariff barriers and intellectual property right. This should be big because you see EU is much bigger than the combined EU is much bigger than the UK economy. And so that is what, as far as this one is concerned, EU. And now government officials are there. Piyush Goyal is there in US. So I think we will have something coming up after he comes back. But I'm expecting by September, the India-US deal will be sealed, signed, and delivered. And I expect it to be good for the markets, though it may not be good for many corporates, which we will come to know only when the deal is signed. So there's no point in speculating at this point of time. I'm looking forward to the deal being signed, and that will augur well for the markets. That's why underlying bullishness will be there in the markets. It is not that things are all bad. At least as far as India is concerned, things are not that bad at all. So there is no reason for us to really panic. So these are some of the things which people are talking of. The minimum import price, and then India is wanting some 5% to 7% basic custom duty cut for exports of labor-intensive products like leather. These are all work in progress. What is important is something is going to happen latest by September. They are talking of October, but sometime by September, October is what I think will happen. So what do I do? How to stay calm during market fluctuations? First of all, be informed. That is what I spend all my time on outside the market, trying to understand what markets are doing or what markets may do. One is never sure what they will do, but that first is staying informed and then have a plan. My plan I detail out every day. My overall plan is for 3 months. I'm bullish on a day-to-day basis. Mostly I'm long, not mostly, I'm long all the time, but I'm prudent. Sometimes I take positions quickly in the morning on a day trading. Sometimes I take it later. Yesterday we took some time, and then we bought in a little later, and it was we almost wiped out the losses of the previous day as far as intraday trading is concerned. But for long term, that is 18 months. My long term is 18 months. So I'm looking at stocks with 18 months time frame and also with a 3-week time frame. So both of them I try to marry. Right now, I'm looking more at stocks with a 12-month to 18-month time frame. So diversifying your portfolio, we are into silver, we are into copper, we are moved out of gold completely. So that is how we are diversifying our portfolio, and we are focusing on the long term because day-to-day fluctuations can unnerve anybody, and we are all human beings, so certainly we'll get unnerved. So there is no point in just worrying about day-to-day. So if you are having a plan, if you are calm and cool and collected, and if you're looking beyond the 1 day, 2 day, 1 week horizon, I'm fairly confident that the market will go up and away. As it like Superman is back in the market, that may happen 3 months later or 3 weeks later, but it may not happen today or this week because the volatility is here to stay. So what I suggest is, sorry, I'm suggesting, I'm not a SEBI registered advisor. What I am doing is being calm, collected, looking for medium to long term, at least 12 months, 18 months is the ideal thing. Diversify your portfolio and don't panic when the selling comes. There will be opportunities to be buying. So whatever you do, I hope it is successful. Thank you.